So what are some stocks that you can look over for this upcoming week? So you can use this free website called finviz.com. It's totally free. So what you want to do is step one, go to where it says screener. And then step two, go where it says market cap, click on mega. Step three, click on where it says performance. Step four, right? Click on where it says perf YTD. Not that, but there we go. And basically it's just going to show you the list of stocks from worst to best, and that's a way you could know what stocks you could look into. That way you're not like just thinking like, oh, maybe this stock is on sale, maybe this stock is on sale. But this is a better way of knowing that these are potential stocks you could look over for the week or look into and possibly invest into as well for the long term or trade. It's totally up to you. And so looking at the list, right? So first up we have UNH, then CRM, Apple, NVO, Tesla, Google, Amazon, CVX, and Home Depot, XOM, and now in Lilly, TSM, TM, AXP, Oracle, BAC, NVIDIA, PG. So basically what I try to do is I try to analyze the list of stocks from worst to best. Usually I pick at least from 1 through 15, and basically I'll try to analyze and see like, maybe that stock is on sale, maybe that stock is an opportunity to trade options or to buy more stock and add it to my long-term portfolio. So you have either options available to you, or you could try to trade a little bit of you could trade these stocks and try to see if you can make some quick money, right? So looking at UNH, so UNH, I also wanted to tell you guys too, so like I was saying, these leverage ETFs charge an expense ratio, and basically the expense ratio for QQQ is 0.20, TQQ is 0.84. So basically each of these leveraged ETFs charge a different expense ratio, and usually that is charged yearly, not monthly. So if you do decide to trade, instead of you're not a risky person and you want to stick to trading stocks instead, you can try leveraged ETFs, which is a little bit more and a better way of trading stocks if you want to make a little bit of more money than trading regular stocks. Or if you're a person that's like, oh, I don't like trading options, I feel like options are a little scary, you can try to stick to leveraged ETFs. That's another thing that you guys could try out. But looking at UNH, right? So UNH, so lately UNH has been getting hammered due to like certain policies that's been happening with them. But other than that, right, this is a company that if you look at their annual earnings per share, EPS usually means like if their number is positive. So for example, 2020 they were positive, 18 positive, 2021 positive, 2022 positive, 2023 positive, 2024 positive, but you did see a decline. So if that particular stock shows a negative sign next to that number, that means you should try to stay away from that company as far as you can, because usually that company will either keep on declining or will just die out eventually. And also a second thing that I try to keep a lookout, I try to look out for when investing, when I'm buying stocks, right? Usually what I'll try to do is I'll try to look at their total revenue. So for example, UNH, their revenue since 2020 all the way to 2024 has been increasing at a steady pace, not like anything crazy, but it's looking nice. So basically if I were to invest into UNH, I would totally do it. I do feel like what they're going through right now with the whole situation of like what's going on with them, their policies and whatnot, I feel like this is the time where you kind of want to uh, you know, try to invest when people are scared, as Warren Buffett says, invest when people are scared. Yeah, I guess that's how he says it. Invest when people are scared. And so basically, for example, UNH right now on the 4-hour time chart, or I guess on the daily chart. Let's look at it on the daily chart. So right now on the, well, let's look at it on the weekly, monthly, quarterly. So right now, basically, it's looking a little not so good for UNH. It is below the 9-day moving average, but if it does decide to regain that 9-day moving average, we could see a potential. We could see a potential. If UNH does decide to use the 9-day moving average as support and bounce off the 9-day moving average, we could test the 9-day moving average resistance level and try to see if we can break that 20-day moving average. And then let's see, CRM. I'm just going to talk about these main three, hopefully, if I have enough time. So on the daily chart, it looks like CRM support level is around this little small range around 265. Let's see, 265, 266. If CRM can maintain itself around that support level 265, 266, we should able to retest that 50-day moving average, break above it, and then we can try to break above these other moving averages. And let's see, Apple has been getting hammered a lot lately, so let's look at Apple. Let's see, I guess you could say Apple is having a little trouble right now. I feel like right now their support level is in the 192 range or 193 range. So basically it's looking a little tricky for Apple right now. If it does decide to use the 192, 193 support level, then we should be good. And if it doesn't use that support level and it decides to break it, we could see further downside. So those are my thoughts on those three stocks for now. Basically, you can do your own analysis on these stocks. Like I said, you can use this free website. You can look at mega cap stocks, or if you don't want to trade mega cap stocks and you're like, you're feeling a little bit more brave, you can look at large, mid, small cap stocks. But if you're a beginner, I personally suggest sticking to just mega cap stocks, because usually these mega cap stocks, even though they see huge downsides at times, these are companies that tend to be profitable over time, and their revenue tends to increase over time. So that's pretty much it. That's a free website you guys could use, and that's how you guys could create a watch list for yourself. That's pretty much it. This is not financial advice. As always, take care and bye.